we are going to flip on over here to our charts. And we are going to get going. Okay, let's see here. I'm going to start by taking a look at what we have going on in the overall market right now. Let me pull this up a little bit bigger for us. And I'm going to start with actually the S&P 500. So right now on the weekly time frame, where we are at is right smack at that 76.4% Fibonacci retracement level, coming up off of this low. And as you can see, the momentum has been really strong this entire move. We've had a little bit of a slowdown over the last couple of months here, just really actually the last month or so, but it's still continued to press higher. Now we're at the upper end of the congestion from the last part of last year, right in here. And this is also helping contribute to some resistance at this current point. So this is affecting the intraday charts and the smaller time frame charts because we are seeing things start to struggle at this level a little bit more than we saw at some of the previous levels. We are past the 200% extension on time extension when I'm looking at these last three lows. We've just come into that third high right here. So we still haven't really fully broken the channel on the daily chart in order to get us that second move on the upside where it basically just treats this like congestion. But we're still playing around with this level and we haven't really given anything on a smaller time frame that has fully created a larger reversal strategy. So when we've been watching the intraday charts, what we've been looking at is here's the last wave of upside, and we've just pulled down into the 61.8% Fibonacci fan on that last major swing up at the end of January into the very beginning of February. And we're seeing a little bit of a shift. You can see how it cuts right through the middle with the 50%. And then we're kind of hugging along the lower end here. But up until today, things were pretty iffy. Now, right now, what it's trying to do, and I talked about this a little bit yesterday in League of Traders, is that we have the potential for this to create basically a shallow type of avalanche where now we're getting pretty close to the 1-to-1 ratio where here's our downside move and then here's our sideways move. So we're right at about the 1-to-1 where things can start to break. So you can get some initial preliminary breaks here. A bigger shallow avalanche will go about twice as long before it fully breaks down, but you do get some that will start with about that 1-to-1 ratio. So the timing on the pivot here today is really close to that exact 1-to-1 ratio, and that's what's helping drive the selling down here throughout most of the session so far. But now we're coming into support here, just on the intraday time frame. So this is a do or die point. So now with the 1-to-1 ratio, I can't draw a straight line here today, but you get the idea. Then this is our first chance for this to try to break down. But it can still go and base out again. So we might get a false break to start with, and then another pullback into the channel before it tries to go again. And sometimes that false break can even lead to some higher highs before it tries to go again. So sometimes it can continue to rise this right along this channel before it breaks down. But right now, that's what I'm looking for mostly as we head into next week. This is what we discussed yesterday as well. There's not really any larger pattern yet that would give me something on the upside. Right now, this is coming at the inverse head and shoulders here. So you hit right at that measured move here today for that major resistance. So it's at another good point that things can start to shift again. So next week we'll have a little bit of a clearer idea. Hey, is this going to be able to turn back around and actually give us A break? Holy cow, we've got like fighter jets flying overhead. Sorry about that. I don't know if you guys heard that or not. It's like really loud zoom right over my office. All right. So we haven't seen anything to totally shift this around that would give us that continuation on the daily time frame, that potential for that base to break out of this larger channel. Hold on just a second, guys. I know they're really loud out here. They don't usually fly this far north. I'm going to switch on over here and I'm going to show you the Russell, because the Russell actually had a stronger, larger scale pattern. And so it's really important to put into context where we are with the S&P 500 compared to where we are in some of the other indices. The Russell here is coming off of a little bit of a momentum reversal slash 2B type of pattern here on the 400 tick chart. Here's my chart that has a bit more going on with it. But I want to show you the daily, because the daily is what has been particularly interesting, because it has had that strong move up, and then it had the shift in the momentum, the same type of shift in momentum that we're seeing on the S&P 500, but it basically shifted right in the middle of this congestion here, and then it broke higher out of that level. So we had about a measured moves type of zone here. I think it was like 76.4, pretty close to it. So what this leaves it available to do is to try to do a second move still on this daily time frame. So this is where watching the intraday charts at this point is really important, because there's certainly room for this to still try to pull back up into basically our breakdown zone from last year on the Russell. Now, I do think that we're going to struggle trying to get past that level in the overall market. The much bigger time frames like the weekly and the monthly charts are going into much longer periods of correction. Let's see here, if I can get a larger chart on here. Show you guys that going back not sure why it's not loading here for a moment, but I'll show it to you on the here. We'll just pull it up here. A little bit faster. So on our monthly chart, what you can see here is that there's a much more dramatic shift in the momentum. And usually when something retraces like this, 50% retracement, really sharp drop, it has a really good shot of coming back up into at least where that channel broke down. That's really where it's hitting right now. The smaller channel breakdown is up here, so that's what the upper kind of potential is that we're looking at here. But this will usually hold this zone. So even when it comes back, tries to retest highs, it's very, very difficult to break through those highs. It's much, much more probable that even if it tries for slightly higher highs, it's going to serve as a trap, and you'll actually see reversal patterns happen at that point. We saw that happening, another good example of when that happened was in the spider back in last year. Let me remove this. When you had the sharp drop here and it came back and it had that slower move into slightly higher high, that's basically the maximum of what you get on something like this. So when it has that sharp retracement about 50%, it can go back and retest those levels a lot, but trying to push through and fully resume the trend is extremely, extremely difficult. In fact, it very rarely would happen right away. You can see over here, for example, back in 2015, the sharp drop came back up, retested the highs, but then it fell back again before it was able to resume the trend. And so as it comes back up into that level again, I would be expecting another rather large drop in the overall market. Not necessarily as fast, but certainly a pretty sizable one. QQQ, same type of thing going on. So you get the rapid sell-off, like in here, and the rapid pop back. So that's what we're looking at right now. So there is still wiggle room here, but there's no like high probability that it's necessarily going to push much past where things are now, because we are coming into the level now that they will have that reaction. So when you have an uptrend channel and you get the sharp sell-off, when it comes back up in here, if this is your channel, then this level right here is the lower end of the resistance. And then if you get some highs, kind of shifting momentum, that will be the upper end of the resistance. So what happens is you can get the sharp reaction off of it. It can come back up in here. Sometimes it will stall there. Sometimes it will go even do a secondary move, kind of do like a measured move there, and then hold and react off of that again. So that is a little bit of what happened in here. The NASDAQ went a little bit further than some of the other indices, but it still held that kind of shifting channel zone. And that's what we are expecting as it comes back into that level again. So right now, looking at smaller time frame setups, certainly we can get some sell-off type of patterns, but it's more likely that given the momentum that we had going back up into the current level, that it can do more of like the 1, 2, 3 type of moves where it pushes higher. And that's what we were seeing on the Russell, except the Russell shifted the momentum in the middle of that push. Let me go back and show you that again. So on the Russell, on the daily, it kind of shifted that. So you get that 1, 2, 3, but it's more of a shifted type of move. So that's why it's a little bit trickier in here, because we still have pretty strong momentum on the upside. There's no major shift in momentum on the daily charts yet. And that means that pivots on the short side, they're more likely to be like a pure pivot here until we can get some sort of shift that would help drive patterns down. So we don't always get that shift. As you can see here, it had an immediate V. But ideally, to get further downside, you would like to see something that would come up, do a measured move, a full measured move, and then shift momentum like that. Maybe a 2T at highs, a momentum reversal at highs, and that would drive in higher probability selling. So we certainly have some setups that will happen on the smaller time frames, but in order to get a higher probability setup on the larger time frames, where you're not just trading a pivot essentially, you want to see some sort of momentum shift also happening. And we're really kind of in early stages of that. So we had some initial reaction over here that was just looking at this zone here as a resistance. Let me put the fan on there, or sorry, the extension on there so you can see that. So you're looking at basically this first move here, and then you're looking at the continuation here. So you can see the momentum was a little bit slower on the second time around, so it's kind of struggled with pulling up into that 100%, but it's still a zone that is serving as a magnet. And then you've got the smaller 2-wave here that was more exact right at this level of resistance. It appears reverse head and shoulders is forming on the larger scale. That was actually one of the patterns that I was looking for as we were coming in here. Was this is the left shoulder coming up, and then I was looking to see if it could form a right shoulder over here, and it's just not had the cleanest shoulder for it. It's basically done the tilted move to the upside. Now we could still get that shoulder forming over here, but what you will notice happens if it tries to do that is that when we look at this low compared to the low here, the right shoulder ideally would trigger a continuation right in here. So I'd usually be wanting to see this coming up in here and forming a shoulder at this point to get the continuation for the second wave up. That would actually be more ideal. So that's what I was kind of hoping for as a little bit of a better, higher probability setup. How do you apply the fib fan to the current chart in TradeStation? So right now, the downside fan here, I usually will look first at the first swing down, and you can see that's, kind of stalled some of the levels here on the way back up, and then I'll shift it to the absolute low. Let me show you there. And that's where you can see we're reacting again right here. And that's kind of what's driving some of the stalling that is happening at this point as well. Now, after this point, you can shift it so you can start to look at the upside fans. And what you'll notice is that first I'll start with the first main swing, just like I did the first main swing on the downside. And right now, it's basically just hugging along that 38.2%, kind of hugged along it. And when something is hugging the fans, that's actually something that can bring in some rapid intraday sell-offs. So if something hugs it really well, you can get sharp drops into the next level. So for example, if this comes down into here, hugs it, that can bring in a sharper drop to the next level, and so on and so forth. You'll also find that when things break through fan levels and then they come back up, upper fan levels will serve as resistance again. So you can look and keep those on there as well as things go forward also. So here, after this commits to a pivot, if it commits to a pivot here, that's the next place that you can move those fans to. And a lot of times what you'll notice is that there's still some synchronicity to where those fan levels are, even if you drew it here and then you drew it here. A lot of them are going to line up still. There'll be different numbers for the fans, but they'll still line up pretty well. The main key to watch for is that when you draw a fan, the earlier levels, like the 23.6 and the 38.2, if you're seeing those hit and hold, then your fan levels are drawn pretty well. And you can keep those on there and anticipate that the next levels are going to hold pretty well too. And sometimes you'll have two fans and both of them will have support at about the same point. And so that means you can get away with using either or kind of flipping back and forth to double check. And then you combine those with other things like, measured move support is another thing to watch for as well. On the smaller intraday charts here right now, let's flip back to this. Here's that momentum reversal I was talking about earlier, right when we were coming in. You can see this is playing out fast. I said it was kind of halfway between a 2B and a momentum reversal, and the reason for that is that this starts out a little bit slower here. So a lot of times this might have stalled right here and then the second wave down. So it kind of would shift like that. So 2B looks like this. And then you get your buy. Momentum reversal looks more like this, where you get the V's back and forth, and then it holds the lower end of the channel here. So this one had some upside moves that were a little bit slower than the downside moves, and it didn't quite have that full parallelogram with the slightly lower low here, just kind of like over here. It has the slightly lower low that breaks out of the channel. So that's a little bit why it's kind of halfway, meaning that if I go and add the trend channel here, I'm basically paying more attention to this for the 2B. And now we're right on, this is kind of like what's happening on the daily charts, where it has that shift in the momentum at that midway point. And so now we're up at basically the larger exhaustion. Sometimes you'll get a third move. Usually you're more likely to get 2 moves, and then the range will widen up like that. So this is kind of one of the more exceptions. Here's another one that was an exception. You had the 2 moves down, and then it went for 3, and then widened up. But it's more likely that you'll see 2 than you will get 3, especially if you're going for a full measured move. So a lot of times if it tries for 3, it might not do a full measured move. So we're kind of getting a little bit of exception here. That is coming right off of the lower end of the channel as well. And we're right into some resistance here from previous highs, lows, and congestion. But again, notice the pace of the buying. So what happens is that at some point the pace will slow. So you'll get the extreme move, and then you'll get the pace slowing. So when you're looking at where the pace is likely to slow, look at previous examples of where the momentum was just as strong in the past and how long that momentum kept going before it shifted. And what you'll see is right here, we're really right at that point that a shift would be most likely. So this would be a point that if you had caught like the 2B momentum reversal type of trade, this would be a good point to protect a lot of the gains coming off of here just because of the size of this move. This was just kind of getting underway when we pulled it up here a second ago, but it's a good one to show you guys what's happening here. So we saw it when it was already starting to pull off of the low, and then you can get the continuation. And here you'll also notice this is kind of the channel breakdown zone. So that is also the start of that upper zone of resistance like we talked about on the daily chart. And that's where you'll get that shift happening. And that's what's going on right here in the overall market right now too. Let's switch over and look at some of the other markets here. I'm going to pull up our Forex pairs. So the euro dollar last week, we were looking at kind of a messy phoenix type of continuation on the intraday charts, basically continuing our 2-wave move into support. So here's the shift in momentum we were watching early last month, and that's what's led to the 2-wave move here. We came into resistance at about the 76.4% extension, and this is just where we're reacting off of this now as we start going into the weekend here. On the larger time frames, I'm more hesitant to do much at this point on this one. I think that there's too much room for this to try to chop around. So I want to wait for something that's a little bit cleaner again, like the 2-wave movement back and forth. Even you can see back in here, nice 2-wave move on the upside. So we are getting some setups that are really nice on a daily time frame that are playing out on the intraday time frame, but we have to be aware that on the monthly and weekly charts, we're not at a great level to give us a strong continuation because we don't have a full shift to allow this to decide, hey, is this going to really break and give us the second wave move down, or is it going to pull out of the channel? Basically, I'm watching this channel here and looking for shifts in momentum now within that channel that can help offer a directional bias on this. Right now, the way this is reacting so weakly off of the support, it's kind of favoring more of the downside movement, even though it started out slower here. It's kind of getting that shifting momentum. So it's a more difficult read currently in the market on the euro dollar for the larger time frames. Show you guys the monthly here too, so you can kind of see where the monthly is in perspective as well. This could have gone for a sharp phoenix if it had held in here and kind of bounced a little bit faster, but we just aren't getting enough of that shifted momentum reaction off of the low for that to happen. So that leaves it open to trying to do a potential for a second wave down now. So not really looking for a bigger time frame entry on this quite yet, just sticking to the smaller time frames. The US dollar or the dollar yen here has continued to be a pretty good one for trading in recent weeks, basically the last couple of months. We are still continuing the upside move. Here's something we were looking at a couple weeks ago where it had a two-wave move to the upside, shifted momentum, started to form an avalanche, but didn't break early enough. So when it did break, it was so late it only did a two-wave measured move. And now we're basically coming out of that channel. And this is coming into resistance again here. Based upon a lot of these previous impulse moves, this is how extended typical moves get on the 240-minute chart. So on the 240-minute chart at this point, I would expect to start to see things slow down on the intraday timeframes. But the daily time frame, if we look at this, what you'll see is that, yes, we have some measured movement here, but this larger base with the breakout here, that's a two-wave move. So this can still go and do another continuation. And in fact, it could even do it faster, like with a 1, 2, 3, like that, because it's kind of slowly gaining steam. So that can even pick up and go a little bit faster back up into that level. And again, that channel break zone, that's the lower end of that resistance. And then you've got the upper end, just basically your upper channel up there. So that could even come up here and go like that at that point. So definitely do not want to go against this one here. For scalp type of moves, this right here, you'll notice today, almost an exact repeat of what we saw on the daily chart or on the 240-minute chart. So you're coming into basically this type of congestion right here is where we're at right now on the intraday charts, just on the 30-minute chart. So you can see, there's some reaction on the 240 there. There's some reaction here just with the two-wave move up, but it's not turning around very easily. And so this can easily go and then continue to break higher too and kind of push the upper limits of this on the 240-minute. So without a shift in momentum on the 240-minute, a little bit better. I wouldn't get too aggressive on any intraday short, even just as basically a day trade type of trade. See here how it shifted a little bit before it pulled back? Here again, you get the shift in momentum a little bit. Those are the type of things that can bring in some of the stronger selling that is easier to trade than something that just tries to purely pivot. The pound is continuing to react off of the two-wave move on the 240. We've been watching this and talked about this week as well, where we had the two-wave move right there. into resistance. So this is something where the range will usually widen up at this point. There's many ways it can widen up, but it'll usually hold, react off of that level. Sometimes it will slowly turn around, correct. Sometimes it will go into the widening range like this, but really good reactionary level. The pound yen was doing the same thing the other day. It was also similar level of resistance here. You can see it's starting to shift intraday. The pound dollar has had a little bit of a stronger shift to start with, but the pound yen is trying to, with a little bit of a 2T in there. So here's that measured move there too. So this is another zone that I'm expecting reactionary moves off of. You can see on the larger time frames too, we're coming at the upper end of the channel, kind of breaking through that channel, which means that on the weekly here, this is really trying to turn around. You have the possibility it could even do an inverse head and shoulders in here so that this ends up being a shallow phoenix that can pull higher, but we need to see a little bit of a slower reactionary move off of resistance here. Now it has punctured the upper end of the channel by trying to go for that bigger two-wave move. So it's shown enough of a shift in momentum coming off of the low that it can try to sustain some stronger upside. Sometimes it will even go a little bit faster. It'll go up a little bit faster, and then it'll try to do like just a shorter correction and then gain momentum. But overall, I would keep more of a bias towards this, trying to do continuation patterns on the weekly time frame that will head higher, but in the short term, reacting off of the resistance here first. So this will be something where intraday you'll get setups, but you'll probably have a harder time getting a lot of follow through on the daily charts because it'll tend to be choppier because of the strength coming up into the high. So it'll tend to be choppier reaction off of those levels. You can already see that's what's tried to happen here in the dollar yen, the little bit of a stronger intraday reaction off of that high. This is something we were talking about after hours in the League of Trader forum. Dollar Swiss has continued to pull back like we were expecting last week, but it's been a choppy move. So we got the breakdown, basically the slower correction breakdown. You'll notice about that 1-to-1 ratio between that last pivot there. So it tried, but it couldn't continue. Here, it would have needed to have bounced in that lower, only that lower 50%, and ideally in the lower quarter to lower third to get a faster 1, 2, 3 continuation. So this is still trying to shift more on the larger time frames, but that's not really surprising when we look at the weekly as well, because the weekly on this one is also really messy. We've got this rising wedge here, which I dislike trading. I do not like trading rising wedges. A lot of times what happens is, well, they look a lot like this, but this is a bigger scale one. They'll have a break, they'll come back up. Sometimes they can come back up like that, but basically they get a lot choppier. And so that's what we're seeing happening here is just a smaller version of what happened over here, which means that it'll be even trickier because you'll have smaller swings a lot of times to start with. So here, at least you had, a nice two-wave move, you had shift in momentum, two-wave bounce. Here, those will get even smaller usually. So it'll be harder to get good follow through to start with. The loonie is basically hugging the lower end of this weekly channel. Pretty decent drop into it. It's kind of a little bit further than I would want for a breakdown. It's gone a little bit further than I would have liked to have seen. I would have preferred to have seen it try to break down over here. Pull up the monthly on this one. Basically, it's trying to form a handle, but it's too early. So breakdown might lead into like an inverse head and shoulders that could shift this, but even that I think would be too soon to get this going. So even if this goes into a right shoulder here, even that is too soon that it would have a harder time really following through with a continuation because of how slow this started here. So I think that an inverse head and shoulders would have a more difficult time. You might get like a secondary move down there and then see a bigger bounce. It could even pull back more sharply and give a bigger bounce. But I don't see anything to really break this out strongly on the upside here yet. Aussie monthly trying to shift to bring in a little bit of a better bounce here on the monthly time frame. Weekly looks like we still have one more flush to the downside though. You can see it's kind of basing here, so it looks like you might get a little bit more of a push here. There's a two-wave swing down, and now we're widening up. So daily is looking a little bit lower as well. No good intraday place for adding into this though, because we already have two waves down to the lower end of the channel. So even if this breaks, it's more likely to try to pull back up in here first before it continues. That would lower the risk on a new short at this point on the daily charts is for it to pull back up in here first. So right at this point, I wouldn't do anything with this, even though it is basing at the low, because I would like to see it do something intraday that could lower my stop level. Because at this point, I mean, you'd basically have to keep a stop above here. So on that channel break, you've got a really wide stop, and your support, your first support is here. So that's not great return compared to what you're risking right now. Gold overnight had a really nice continuation. Hold on just a second, guys. Oh, sorry, you guys. There we go. Now we got audio again. Okay, so gold is something we were looking at in the forum last night. where it was a continuation of the avalanche. So we were looking at 100 or 1310 as being really easy support to get to. That's basically the previous low zone here. And it's continued to push a little further. And this is based upon what's going on the larger time frames. So on the daily chart, what you'll see is that we've got a pretty good extension type of move at highs. So we're shifting the momentum at this high. And this type of sharp breakdown, again, it is one that we can get some stronger bounces again off of coming back up, but it's enough of a shift in the momentum here that the risk is greater that we could see further continued selling. So this is the next level of support. It's all that congestion from right at the beginning of the year. I'm going to go up to a weekly on this here. And what you'll see at the weekly is that we've got even stronger resistance. So this congestion is also that breakdown zone there. So that's basically the next support level. But with this V action, we're really looking at more of a trading range type of move to develop on the weekly time frame here. So this can still pop back up like that, where you will get kind of retest of high with the momentum being so strong, but it's going to get trickier and you'll start to get probably more of the choppier action like this again as we go into the continuation of the year. Oil, also kind of in a tricky place here. This is a daily chart. So we had that kind of attempt at a momentum reversal, but it was at that lower end of the range. So it almost served as more of like a shoulder to a head and shoulders. Really messy though. So we're struggling to see any strong directional bias on this on the daily time frame. It's something that could chop around here and still break higher, where this is a first low and this tries to do a second low. So I wouldn't totally discount the bounce that is happening here. I'll show you the weekly chart though, and you'll see that the bounce is really a reaction to the strong selling. So bounces like this can come back in to this previous low as long as they hold the 50% retracement. So it's really going to be a do or die spot here when we come up to this level on oil. If it holds that level and you see the channel break, then I'd be looking all the way back here at least for the next target on it. But if it manages to pull past that level, then you're looking at more of a trading range. Yeah, guys, the audio is my fault here. I'm still have a lingering cough after being sick a couple weeks ago. So I'm just trying not to blow anybody's eardrums out. So if it looks like I am drawing or anything, it's because I forgot to unmute myself. Um, let's see. What else we got here? Bonds. So bonds we were looking at for breakdown. So we're right at this resistance zone on the weekly time frame. The daily time frame, we have that avalanche that's triggered here. And this was one that was kind of dealing with a do or die point here, because the way this came up here, this could go for a second move up there and actually create a 2T. So it was really at a strong do or die point at that level. And by breaking the channel, it triggered the downside move. So first support we were seeing was this previous low, just a little bit of minor support. Next support is this congestion here. So with an avalanche that kind of picks up steam here like this, our first level of support, we want to watch for basically what would be the lower channel here. And that's also going to correspond here. So you'll go for that. And then you've got to see is, does it hold that level? How does it hold that level? If it bounces just a little bit, it can go for a second wave. Otherwise, it can pull up here, create a longer range that if it hugs the lower end of that range can break down faster, but if it pulls up to the upper end of the range, that can trigger a continuation on the upside. So this becomes another strong do or die point right here. So I'm still looking for a continuation of that play from over the last couple of days here. Just at least to that point. All right. Do you guys have any individual stocks you want me to take a look at here? Twitter. Twitter is trying to form a continuation of the gap the other day. So it had this trap on the upside here with the gap down. And we've talked about this a lot where with this momentum is still pretty strong and you're in a counter wave move, I'm actually looking for this zone of congestion for continuations on the downside. So this is something that even here can still offer a continuation. I would like it to base a couple days and then look to pull a little bit lower again. You see the weekly. Weekly is a lot of this type of zone that the euro dollar is at. Basically, you're dealing with the move up and the halfway move back down. So right now, this is looking like you've got a little bit more downside, and then we might bounce again off the lower end of that support on the weekly. But I would watch for intraday on like a 240 minute for a little bit of a longer base here to get a secondary move down on that daily chart. JD, this looks like one that can gain momentum further. So you've got some of like the shallower phoenixes and then it's moving up. So this type of thing can even go a little bit crazy. You can get secondary moves like that at times. Let's look at the weekly on this. It's already looking like it's going into that here right now. Let's see. Retracement. So 38.2%. Basically, if it holds under the 50%, probably like the 38.2, those can come back down and try to retrace this level right here, but it does have enough of a shift that that just might not happen easily. So this is something that can easily go and do another secondary swing here and then go into congestion again. I don't know what like the news is that's driving that, but based on the pattern itself, that's pretty typical. On an entry, I don't know that there's anything currently that I would look for an entry on this. I'd need to see some sort of congestion here to offer a continuation. Because right now you're right at kind of smaller measured move. So it's not something that I would do a new entry at this point. But if it's something that I was already in it, I would consider that it still had more room to to go. Basically just dealing with some first resistance here, but we're not even at a Fibonacci retracement level at this point. Let's see. Fans aren't going to be as useful just because it's so strong. But if you're going to draw it, it would be here. So that's actually also corresponding with the current smaller level of resistance that it's dealing with. And then that 61.8 is what I would look for like the main target on that. Here's kind of a bigger version of similar type of momentum increasing. It's not quite exactly the same, but it's a similar idea. SQ is at another tricky spot on the weekly chart because it's at that midway point. So you get reactions for shorts, and then ideally, if you get it like a two-way correction here, that will give you a second move for a long side. But if it just kind of creeps up, it can be trickier to trade that. Your probability levels drop. So intraday, this is something that it hit right at that main resistance level. Could have even gone and continued here for a breakdown. So it went past the do or die point there, but it hasn't really gotten off the ground yet. So this is something still I think is susceptible to flush action on the downside. Roku is hitting the lower end of that resistance from the channel break. So when you're dealing with the channel break zone, then your upper end is usually a little bit higher. So this is something, it's getting into a point where the momentum should shift again. So we will start to see more of back and forth action on the daily chart on Roku here. But it still has room to push a little bit further. It's just going to start to do more of the back and forth. Chipotle, I think we've got a little bit more room on Chipotle. So we don't even have a measured move quite yet on this. So I think there's still a little bit more up there, but again, because this is such an extreme move, similar to right here, things can start to shift. So this move here is really similar. This move here is really similar. This move here is really similar. All of those are comparable as far as the momentum and time development compared to the current move. So you'll notice what happens at each of those levels. Things shift, things get choppier. So even though they can push further, like this one here especially, they can even give some fast, sharp pushes. The overall shift is what we should expect here on CMG as well. This is a lot like that Phoenix that has been trying to be in play on the Aussie dollar on the daily chart. What kind of started out slowly, choppy, got to start, can chop. This can still pull higher. It's just overall, I would expect it to do it in like brief bursts with a lot more overlap in the overall channel here. So a little bit of congestion, another burst. That's what I would look for on the monthly on the pound Aussie here. So on the daily chart, it's just like a lot of the other pound pairs where it has that measured move resistance. And so this is a good level to get reactionary moves off of there. But larger time frame objective, this can go up again. These are really hard levels to trade up here because they can do a lot of different things. They can shift higher, so you can get little starts of a pullback and then just get higher highs. They can absolutely hold the high, go in and have a choppier pullback, go like that, gain momentum, so that it'll be really whippy back and forth. They can even go into like a longer base and end up breaking higher. So when you have the 1, 2, 3 like this is a higher risk zone for trading. You do get some that give you absolute pivots, but a lot of others just won't go right away. They'll have the choppier action. So those are really the hardest spots for a lot of traders to trade, even though they see the resistance really well because it's a perfect measured move. The ones that will give you the stronger reversals will be when you actually have that channel shifting too. So this is a two-wave move, and you have the sharper two-wave here, but the overall channel is shifting with the two waves. So that leads to a little bit of an easier pivot, turns around a little bit better. So watch for the 2 and 2 to kind of help shift that momentum for you. Platinum is right at the same type of resistance. You're right at the previous high. You've got your two-wave move here. So this is again a place that things can get choppier. So any of those reactions is now possible at this zone. Basically, if you're on a long side, this is a major zone of resistance that's now hitting. It kind of enters like all men for themselves, all men, all women for themselves at this point. This is where I say expect things to start to widen up now. So you'll get, like the two-wave move here, and then you get all different kinds of reactions off of those. But as soon as you have that two waves in and it's a 1, 2, 3 really rapid move, that's when things can start to shift really, really well at that point. And the peso monthly is trying to form a little bit of an avalanche. Because this is an extreme drop here to start with, avalanches here will tend to go a little bit slower, so you can get, shifting momentum coming out of them. So we are reacting right off of the lower end of this channel. So a lot of times what can happen sometimes is that they will start and they'll break and they'll only do like a measured move there to start with. And then you really have to watch that level to see if it can do something that can still manage to gain steam and really bring in stronger selling. It's easier if this move down is more of an average to even slightly slower than average move. because then the shift in momentum brings in a lot stronger selling. So you'll get a much sharper drop almost right away. When this drop is already substantially stronger than average, the breakdowns for continuation can be a little bit trickier unless it goes faster. So if it breaks down here, base is just short period of time and then continues, you can get that more rapid move. But if it goes out a little bit longer, it can have a harder time gaining steam on a breakdown. All right, guys, I need to wrap this up, but I will get this video recording up onto the website for you guys. And that will be done here by the end of the day so that you can go back and review it. You are very welcome, gang. I will see you all back on Monday. For those of you in League of Traders, we will be continuing with our advanced trade management in Monday session.